Now we see the example number 17 from MB Kadkol book. Daneshwari Publishers agreed to take up the printing and sale of book from the author Somnath. Somnath is the author, Daneshwari is the publishers. So lesser is author is Somnath, and Daneshwari publishers are the lessee. They are publishers. Okay. They made agreement on 1/1/1986. Starting date of agreement is 1/1/1986. The following are the terms of agreement. First agreement is royalty payable is 20% on sale price of the book. You remember this one. How, on what basis the royalty is fixed? Okay. Royalty is 20% on selling price of the book. And selling price of the book is 30 rupees per copy. Okay. On 30 rupees, you calculate 20%, you will get the rate of royalty. 20% on 30 rupees, nothing but 6 rupees. Okay. But it is on selling price of the book, on sales, not on the production. This is the point you have to remember in this problem. It is the technical one. Okay. First point is clear. And second is the author is to be paid minimum amount of which 20,000 per annum. 20,000 per annum is the minimum rent. Second point clear. And third point is each year excess of minimum rent over the actual royalty is recoverable out of the next 2 years. You see here, next 2 years. Next 2 years means floating 2 years, floating time. Okay. 3 points completed. First is rate of royalties 20% on sales. 20% on sales. Second is minimum rent 20,000. Third is recovery of short working next 2 years. Okay. And you see here, year and date is given in the problem, number of copies printed and number of closing stock of copies or books is given. Your rate of royalty is on selling price or sales. Royalty is on sales, not on books printed. Books printed means production. Royalty is on sales but not the production. Therefore, you have to calculate sales. Before preparing the royalty chart, you have to calculate the number of books sold. Number of books sold you have to calculate. I already given the equation. Sales is equal to opening stock plus production minus closing stock. This is the equation already given in the previous class. By application of that equation, you have to calculate the number of copies sold. That sold copy is to be calculated. Then rate of royalty is to be applied. Okay. Don't directly apply the rate of royalty to the number of copies printed, because the rate of royalty is on the sales. Therefore, first we have to calculate sales. Then in the second step, we have to calculate the royalty chart. Then whatever they asked, you pass the journal entries in the books of Daneshwari Publisher. Daneshwari Publisher is the lessee. Journal entries you have to prepare in the books of lessee. Okay. You see this problem very carefully. In this problem, royalty is fixed on the sales, but sales is not given in the problem. Sale value, sale quantity is not given in the problem. Sale quantity is not given in the problem. Therefore, you have to calculate sale quantity before preparation of royalty chart. Sale is equal to opening stock plus printed minus closing stock. Okay, you see here for the first year, there is no opening stock is not in the first year. Unit produced printed is 3,000. Publisher printed 3,000 books, and closing stock means at the end of the year 250 books are still in stock. That means unsold. Means out of 3,000, 250 are in stock. Means sales is equal to 3,000 minus 250. Okay, 2,750 is the sale. Okay, 3,000 is the printed. 250 are in hand. Okay, then sale is equal to, out of 3,000, 250 are in hand, unsold. At the end of the year, that remaining quantity is sold. Okay, then you have to prepare like this. And remember, my dear friends, closing stock of this year will become opening stock of next year. This is the point you have to remember. Opening stock is not given in this problem. Opening stock is not given in the problem. What is opening stock? Current year opening stock is the closing stock of the previous year. Okay. Current year closing stock become the opening stock for next year. You see here. 1986 closing stock 250. This becomes the opening stock for 87. 300 closing stock of 87 becomes the opening stock for 1988. 100 of closing stock of 1988 becomes the opening stock for 1989. This is the point you remember. This is the accounting principle. You know that last year closing stock become the opening stock for the current year. This is the point you remember. Okay. On the basis of this, I will prepare the chart. Any doubt about this? First royalty is 20% on 30 rupees, that is 6 rupees. Second, minimum rent is 20,000. Third point, recovery of short working, next 2 years. Clear? Now we prepare the chart. You see the chart. Statement showing copies sold. First we calculate number of copies sold because rate of royalty is on sales. Okay. This is the chart. Date, year end, 4 years are there. Year end date is here. Then I will take the opening stock. Opening stock is the first copy. Opening stock plus production minus closing stock is equal to sales. Okay. Opening stock, number of copies printed. Then number of copies printed for the year 86 is 3,000. I will take the number of copies. You see here. Number of copies printed for 4 years is like this. 3,000, 3,200, 3,500, 3,650. Okay. Then I will take the closing stock. Closing stock is 250. Okay. This 250 of 1986 closing stock become the opening stock for 1987. You see this point. 86 closing stock becomes the opening stock for 87. Clear? Then 87 closing stock 300. This becomes opening stock for 88. And 88 closing stock is 100. This becomes the opening stock for 89. And 89 closing stock 200 is this, will become the opening stock for 1990. But that information is not given for you people. Okay, like this you have to calculate. First year opening stock is nil, and second year opening stock, third year opening stock, fourth year opening stock. How I calculated? Once again, you repeatedly see the video. Okay. Now you follow the equation. Opening stock plus number of copies printed minus closing stock is equal to copies sold. First is 2,750. Second, 3,150. 250 plus 3,200 minus 300. 300 plus 3,500 minus 100. 100 plus 3,650 minus 200. 3,550. Like this, you calculate the copies sold if the royalty is based on number of copies sold. Okay. Now we prepare the royalty chart. Here I calculate the rate of royalty. Rate of royalty is 30 rupees is selling price. 20% on that is rupees 6. 6 is the rate of royalty. Like this you calculate. Now you prepare the royalty chart. This is the royalty chart. You write the date. Then output. Output means units sold. Copies sold you have to take. Output means copies sold in this problem. 2,750 first year, 3,150 second year, 3,700 third year, 3,550 fourth year. You take this as a unit sold. Unit sold is you take the last column quantity. Rate of royalty is 6. Okay. Multiply the unit sold and rate of royalty. You will get the royalty. First year 16,500, second year 18,900, third year 22,200, fourth year 21,300. Okay. Next is minimum rent. Minimum rent is 20,000 for all years. 20,000 for first year, second year, third year, fourth year. Minimum rent. Next, I will calculate excess first because SW, SWR, SWR columns come serially. First, I will calculate excess. Excess means royalty minus minimum rent. First year 0, second year 0, third year 2,200 is the excess. Then last year is 1,300 is the excess. Then short working. Short working is equal to minimum rent minus royalty. First year short working is 3,500. 20,000 minus 16,500. Second year short working is 1,100. Third year short working is 0. It is not possible. Fourth year is also not possible. Next, short working recovery. For recovery of short working, next 2 years are the time limit given. For 3,500, next 2 years are 87, 88. And for 1,100, 1,100 short working, next 2 years are 88, 89. Okay. This 3,500 is not recovered in the first year and second year. In the third year, 2,200 is excess. Out of this 2,200, it is not possible to recover 3,500 fully. So, out of 3,500 short working, you recover 2,200 short working, and remaining balance goes to next column. 3,500 short working, 2,200 recovered out of excess amount. Then balance is 1,300 goes to your recovery column. And next is 1,100 short working. This 1,100 is to be recovered in the next 2 years. Next 2 years means 88, 89. In the year 89, there is a excess of 1,300. You recover 1,300, you recover 1,100 from 1,300 excess amount. So 1,100 fully recovered. Then there is no balance. Okay. Like this, you calculate the SWR and SWIR 0, put the 0. Next, you calculate payment. Payment is equal to royalty plus SW minus SWR. First year. Second year, royalty plus SW minus SWR. Third year, royalty plus SW minus SWR. Fourth year, royalty plus SW minus SWR. 20,200. Okay. This is the chart. Then you have to pass the journal entries in the books of publisher. In the books of publisher. Okay. First year 3 entries, second year 3 entry, third year 3 entry, fourth year 3 entry. Okay. Yesterday I explained the entries. First entry is royalty account debtor to lesser. Second entry, lesser account debtor to bank. Third entry, P&L account debtor to royalty. These are the three entries, and these three entries you have to join short working. Short working. If amount is in SW column, you joined in the first entry. If amount is in the second column, you join short working in the second entry. If the amount is in SW R column, you join in the third entry. First entry, short working debited. Second and third entry, short working credited. This is the point you remember. It is very simple. Okay, I'll see the journal entry. You see here, journal entries in the books of Dhaneshwar Publishers. I have taken the columns and rows. First year, this is the information. For your convenience, I have taken the table. I have taken the table for your convenience. Okay, not for the record purpose. You don't draw this table. You don't draw this table in the examination. You directly write the journal entry. For your convenience purpose, I have taken the table. You don't take the table. Remember this point. Okay, this is journal entry format. First year, date, particular, LF, debit, credit. Okay. First year date is 1986. You see here, in this line, SW is here. SW 3,500 is. So this is to be debited in the first entry. Okay, this is the common point you remember and pass the entry. This 3,000, for this 3,000 you have to debit short working in the first entry. You see here, royalty account debtor, short working account debtor to Somnath account. Somnath is the publisher. Sorry, author. Somnath is the author. Being minimum rent due. If there is short working, you write as a minimum rent due. If there is excess, then you write as a royalty due. First entry. Second entry, Somnath account debtor to bank account. Being royalty paid. Third entry, P&L account debtor to royalty account. These are the three entries. Okay, first year. First year, three entries. In the first entry, I joined the short working account debit because here is the amount. Okay, SW 0, SWIR 0. Therefore, second entry, there is no short working. Third entry, there is no short working. Remember this. Like this, you have to join the amount. Now, write the amount. Royalty is 16,500. Short working is 3,500. Total is 20,000. You take the total 20,000 in the next entry. Then bank amount 20,000. Payment column. Payment column 20,000. You write in the to bank account 20,000. Then P&L account amount you write at the end. First you write the royalty. Royalty amount is 16,500. 16,500, 16,500. Like this you write the journal. This is first year completed. Okay. In the same way, I will teach you the second year. You pass journal entry continuously year by year. For your convenience, I divided the journal entries into part. First year completed. You take the total, C bar F, goes to next page. This is the 1987 detail. 1987, 3,150 output rate, royalty, minimum rent, excess no, short working, and amount payable to landlord. I taken this table from the common table. For your convenience purpose, I have taken. Then pass the journal entry. Date, particular, amount, debit, credit. Date is balance from the first pages. You take the balance forward, brought forward. Write the date 1987. You see here in the SW column amount is there. SW column 1,100 is here. For this is 1 year information, 1987 information. And SW no, SWIR no. Therefore, you join SW short working in the first entry only. First entry only. You see here. Royalty account debtor, short working account debtor to Somnath account. Being minimum rent due. Somnath account debtor to bank account. Being royalty paid. P&L account debtor to royalty account. Being royalty transfer. You see here. Only I joined short working in the first entry because amount is in the SW column only. There is no amount in the SW or SWIR. Okay. Write the amount. Royalties 18,900. Short working 1,100. Total 20,000. You take this total 20,000 to second entry, Somnath account. Bank account, payment column. Royalty, PL account 18,900 is royalty. Royalty transfer 18,900 is from royalty. You first write the royalty, then write PL account amount. Then write the PL account amount. Okay, this is the point you remember. Then take the total. 1,15,400 is the total of this page. Whenever the page completes or ends, then you take the total. Otherwise, don't take the total. Don't make year-wise total. C bar up. Carry forward. Okay. Then this is information relating to 88. 1988. Okay. 1988. Here you draw the table. Brought forward amount is 1,15,400. Then for the year 1988 journal entry, you see here. In this year, royalty is here. There is no amount in the SW column. Amount is in SWR and SWIR. Okay, you see these two amounts. And these two amounts are to be credited. These two amounts credited in the SWR, credit in the second entry, SWIR, credit in the third entry. First entry, no short working. Okay, you see on the basis of these three amounts, you have to join the short working. You see here, royalty account debtor to Somnath account. Here no short working. Here no short working because amount is 0. Being royalty due. Next, Somnath account debtor to royalty short working to bank account. You see here, I joined the two short working account because here amount is 2,200. Being royalty paid. Third entry, PL account debtor, two short working, two paid. Two short working, two royalty. You see here, two short working, SWIR. Okay, how to join the short working in the journal entry? I think you come to know how to join the short working in the journal entry. In the first entry, there is no short working because SW is 0. In the second entry, short working. Third entry, short working because SWR, SWR are there. SW comes in first entry, SWR in the second entry, SWIR in the third entry. You have to join. SW debit, SWR credit, SWIR credit. Now I write the amount. Being royalty and SWIR transferred. 22,200 is royalty account to Somnath account 22,200. Next, Somnath account debtor 22,200 to short working. To short working means SWR. SWR is 2,200. 2,200 you write. To bank, payment column 20,000. Bank means payment column 20,000. PL account debtor 23,500. This is taken on the basis of total of short working and royalty. You write this amount at the end. First you write the short working. This 1,300 is from SWIR column. SWIR column. Then royalty from royalty column. 22,200. Total of these two write in the debit column. P&L account debtor. Okay. It's 1988 completed. You take the total goes to next page. Okay. This is the information related to 1989. 1989. In the 1989, there is no SW. SWR is here. SWIR is not given in the problem. Therefore, you join short working in the second entry. You join short working in the second entry. You see here. This is the brought forwarded amount. Date, royalty account debtor to Somnath account being royalty due. Somnath account debtor to short working to bank account to being royalty paid. I joined the short working account here because amount is there. Okay, second entry. Third entry, royalty account debtor to, sorry, P&L account debtor to royalty account. Here no short working because there is no amount. Okay, these are the three entries. These are the three entries. Okay. Now fill the amount. Royalty account debtor 21,300. Somnath account 21,300. And you see here, royalty account debtor 21,300. Royalty. This is the total amount, same comes. Then the 21,300 comes to the second entry. Somnath account debtor. Two short working from the SWR column. That is 1,100. Right, 1,100. Then bank account payment column. Okay. Then P&L account data 21,300 to royalty account 21,300. This is taken from the royalty column. Okay. Take the total. This is the total. Like this, make total at the end. Okay. You make the total at the end. For your convenience, I have taken the table here. You don't write this table like this. Okay. On the basis of royalty chart, you solve the problem. Once again, you solve the journal entries like this. This is the journal entry problem. Two problems I solved on the basis of journal entry. Okay. And you solve the remaining problems. You try to solve all the problems in your home. ಈಗ ಸರಿಯಾಗಿ ನೆನಪಿಟ್ಕೊಳ್ರಿ ಯಾವ ರೀತಿ ಎಕ್ಸ್ಪ್ಲೈನ್ ಮಾಡಿದೀನಿ ಈ ರೀತಿ ಮಾಡ್ರಿ ಈ ಮ್ಯಾಲೆ ಏನ್ ಚಾರ್ಟ್ ಹಾಕಿದೀನಿ ಚಾರ್ಟ್ ಅನ್ನ ಪ್ರತಿ ಪ್ರಾಬ್ಲಮ್ ಹಾಕ್ಬೇಡ್ರಿ ನಿಮಗೆ ತಿಳಿಲಿ ಅಂತ ತಿಳ್ಕೊಂಡು ತೋರಿಸೋ ಸಲುವಾಗಿ ನಾ ಚಾರ್ಟ್ ಹಾಕಿದ್ದೀನಿ ಇದನ್ನ ತಿಳಿಲಿ ಅಂತ ತಿಳ್ಕೊಂಡು ತೋರಿಸೋ ಸಲುವಾಗಿ ಈ ಮ್ಯಾಲಿನ ಚಾರ್ಟ್ ಹಾಕಿದೀನಿ ಈ ಮ್ಯಾಲಿನ ಚಾರ್ಟ್ ನೀವು ಪ್ರತಿ ಸಲ ಹಾಕ್ಬೇಡ್ರಿ ಈ ರಾಯಲ್ಟಿ ಚಾರ್ಟ್ ಏನ್ ಹಾಕಿರ್ತೀರಿ ಅದನ್ನ ನೋಡಿ ಪ್ರತಿ ಲೈನ್ ನೋಡ್ಕೊಂಡು ನೀವು ಜರ್ನಲ್ ಎಂಟ್ರಿ ಬರಿಬೇಕು ಮತ್ತೊಮ್ಮೆ ಜರ್ನಲ್ ಎಂಟ್ರಿ ಸ್ಟಾರ್ಟ್ ಮಾಡಿದ್ರ ಎಲ್ಲಾ ವರ್ಷ ಮುಗಿದ ತನಕ ಬರ್ಕೊಂತ ಹೋಗ್ಬೇಕು ಪೇಜ್ ಮುಗಿದ ನಂತರ ಮಾತ್ರ ಟೋಟಲ್ ಮಾಡಿ ಮುಂದಿನ ಪೇಜ್ ಟೋಟಲ್ ಬೈರಿ ಮತ್ತೆ ನಾ ಮಾಡಿದ ಈ ರೀತಿ ಮಾಡ್ಬೇಡ ನಾನು ನಿಮ್ಗೆ ತಿಳಿಲಿ ಅಂತ ತಿಳ್ಕೊಂಡು ಪ್ರತಿ ವರ್ಷದ ಟೇಬಲ್ ಕಟ್ ಮಾಡಿ ಹಾಕಿ ತೋರಿಸಿ ಒಂದ ಟೇಬಲ್ ಕಾಮನ್ ಇರ್ತೈತಿ ರಾಯಲ್ಟಿ ಚಾರ್ಟ್ ಇದ್ದ ಅದನ್ನ ಹಾಕಿ ಸರಿಯಾಗಿ ಮಾಡಿ